A general ledger is the master accounting record of a business that centralizes and organizes all financial transactions into specific accounts such as assets, liabilities, equity, revenue, and expenses. It is the foundation of the double entry accounting system and is used to produce a company's essential financial statements. How a general ledger works. The general ledger functions as the central hub of a company's financial data by following a structured process. Record transactions every financial event. Example, a sale, purchase, or payment. It is initially recorded in a journal or subledger in chronological order, detailing the date, description, and amounts. Apply double entry bookkeeping. Each transaction impacts at least two accounts with a corresponding debit and credit entry of equal amount. This ensures the fundamental accounting equation, that is, assets is equal to liabilities plus owner's equity, remains balanced. Post entries, the entries from the journal are then posted or transferred to the appropriate individual accounts within the general ledger, updating each account's running balance. Summarize and balance periodically. A trial balance is prepared, which lists all the accounts and their balances to verify that the total debits equal the total credits. Generate financial statements, the final balance data from the general ledger, is used to create key financial reports like the income statement, balance sheet, and statement of cash flows. What are the key components of a general ledger? The general ledger is organized using a chart of accounts, which is a comprehensive list of all account names and assigned numerical codes used to classify transactions. The five main types of accounts are assets or resources owned by the business that have future economic value. Example, cash, inventory, equipment, accounts receivable. Liabilities, obligations, or debts owed to others. Example, accounts payable, loans payable, and accrued expenses. Equity, the owners or shareholders stake in the business after subtracting liabilities from assets. Example, common stock, retained earnings. Revenue, income earned from the company's primary operations and other sources. Example, sales, service fees, interest income. Expenses, costs incurred to generate revenue. Example, rent, salaries, utilities, and advertising. What is the importance of general ledger? An accurate and well maintained general ledger is critical for several reasons. Financial reporting, it provides the necessary data for internal management, investors, and creditors to assess the company's financial health. Decision making by tracking where money comes from and goes. Business can identify trends, spot cash flow problems, and make informed strategic decisions. Audit and compliance, it provides a transparent, detailed audit trail that helps ensure compliance with accounting standards like GAAP and simplifies tax preparation and external audits. Format of general ledger. The general ledger typically uses one of two formats. One First one is the T account format, primarily used for educational or summary purposes, or a more formal multi column running balance format, common in modern accounting software and manual systems. Running balance format. This is the most common and practical format for ongoing business operations, providing a continuous, detailed record of each account's activity and current balance. Each account has its own dedicated page or digital view with specific columns for every transaction. The columns are date, the date on which the transaction occurred, particulars or description, a brief description of the transaction and the other account affected. For example, cash sale, paid rent, or the name of the vendor or customer. Journal folio or reference across reference code, example page or entry number to the original journal entry, creating an audit trail. Debit, the amount debited that is recorded on the left side in double entry. Credit, the amount credited recorded on the right side in double entry. Balance, the running or cumulative balance of the account after each transaction is posted. T account format is another format. The T account format is a simplified visual representation often used for teaching accounting principles or analyzing specific transactions quickly. It is shaped like the letter T with the account name written across the top horizontal line. Left side, all debit entries are recorded. On the right side, all credit entries are recorded. This format clearly illustrates how each transaction affects the fundamental accounting equation, that is, assets equal to liabilities plus equity, by showing the increases and decreases to a specific account. Both formats organize transactions by account type, that is, cash, accounts payable, sales revenue, etc., rather than chronologically across all accounts, which is how a general journal is structured. This structure allows for the extraction of account balances to prepare a trial balance and subsequently the full set of financial statements.